Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and today's contract tip has to do with special stipulations addressing appraisals and government insured loans. So what do I mean? Well, when a buyer is getting an FHA loan, a VA loan, what that means is the loan is guaranteed by the government or a part of the government. So an FHA loan is the loan, even though it is issued or extended by a lender and an investor, it is guaranteed by FHA, Department of Federal Housing Authority. A VA loan is guaranteed by the Veterans Administration. So these loans, even though they are issued by institutional mortgage lenders, funded by investors, they are guaranteed by the government. So in this market, and this is August 2021, but in any market, we are seeing a preponderance of special stipulations addressing appraisal issues. And more specifically, we're seeing what is lovingly referred to as an appraisal gap stipulation. And in essence, what that is the buyer in their offer, when they go binding with the seller, is writing a special stipulation that in essence says, should the appraisal come in lower than sale price, the buyer will pay X amount of dollars over the low appraisal, not to exceed the sale price. Whole other videos on that and what happens if there's still a gap and so forth and so on. So let me just say that if any buyer is getting any kind of loan, a conventional loan, FHA loan, VA loan, USDA loan, any kind of loan, if an appraisal comes in low, without any special stipulation, a buyer always has the option of bringing cash for the difference between the appraisal value that's lower than the contract sale price and the sale price. That a buyer always has that option to make up the difference themselves with cash and still close on the property. However, when a buyer and a seller go under contract, in the contract in and of itself, either the purchase and sale agreement, if you're binding under the RE forms, in the loan contingency exhibits, in the GAR forms. Now, if you're buyer and seller, if your buyer's writing a contract and it's on a HUD contract, Fannie Mae, Freddie Mac, new construction contract, investor contract, attorney written contract, you're going to have to read the contract specifically to see what any financing and appraisal contingencies there are. But specifically with the appraisal contingency in the GAR purchase and sale agreement, that is spelled out in the loan contingency exhibits. And as I said, a buyer always has the option of bringing cash if the appraisal comes in lower than the contract sale price, regardless of any special stipulation. That's always a buyer option. Now, if a buyer wants to terminate based on an appraisal coming in lower than the contract sale price, then there are processes, procedures, timelines for notice, and how that all plays out. That is all written in the GAR loan contingency exhibit. So please make sure to read through those exhibits. In the RE forms, it is all spelled out in the standard terms. But back to the point at hand. So we are in this ultra competitive market where we have multiple sellers are receiving multiple offers on their properties, and buyers are doing all kinds of giving all kinds of concessions to entice a seller to choose their offer over another buyer's offer. And again, one of the concessions or stipulations that we are seeing is this appraisal gap contingency. And as I mentioned, a buyer will pay X amount of dollars over appraisal up to the contract sale price, so forth and so on. So what happens if the buyer is getting an FHA or VA or USDA loan, a government insured loan? Well, let me just start off before I get into the rest of this video by saying that bottom line, if there ever is an issue, ultimately it would be decided by a judge. That being said, let me explain a little bit further why I said that and why there potentially could be controversy. Based on there is an amendatory clause for an FHA insured loan and a VA insured loan. And in essence, the amendatory clause states, well, I will tell you that what the amendatory clause states. The amendatory clause must be included in a sales contract when the borrower has not been informed of the appraisal value, which when they first are going under contract, they're not going to have the appraisal value, by receiving a copy of the appraisal before signing the sales contract. The amendatory clause must contain the following language. It is expressly agreed that notwithstanding any other provisions of this contract, the purchaser shall not be obligated to complete the purchase of the property described herein or to incur any penalty by forfeiture of earnest money deposits or otherwise unless the purchaser has been given in accordance with HUD, FHA, or VA requirements a written statement by the Federal Housing Commissioner, Deputy Department of Veterans Affairs, or a direct endorsement lender setting forth the appraised value of the property of not less than, and in an FHA insured loan, you put in a dollar amount. In a VA insured loan, it just says reasonable value by the VA. So, and in the GAR purchase and sale, in the GAR exhibit, as well as the GAR loan exhibits, FHA and VA, and as well as the FHA and VA loan exhibit in the RE forms, it states in there, it has a sentence that the exhibit shall control over conflicting or inconsistent provisions. So, I'm not an attorney. I'm not a judge. I am a broker. As a broker, regardless of any special stipulation written in a contract, if a buyer is getting an FHA or a VA insured loan, the buyer may terminate the contract. You can't just walk away and not show up to closing, but the buyer may send a termination to the seller if the appraisal comes in low, and they will get their earnest money back, regardless of any special stipulation. That is my broker interpretation, and that is definitely a reasonable interpretation given a lot of resources out there regarding the amendatory clause that is required. And there are several resources where it specifically states that although the parties are generally free to mutually agree to terms of a contract, in other words, by special stipulation, amendment, exhibit, this is not one of them where a buyer is going to be penalized by losing their earnest money if the value of the property on a government insured loan is lower than the contract sale price. In other words, the government trumps, pun intended, or no pun intended, any contract. You can't write a contract that creates something that's potentially illegal for the parties to agree to, even though it's in the contract and they agree. Now, in the GAR contract and in the RE forms, it specifically states that a special stipulation supersedes an exhibit, which supersedes a purchase and sale agreement. And again, it would be up to a judge to decide if the government, FHA, VA, USDA, if their rules and regulations are going to take precedence over an attorney that's going to argue contract law and what the parties agree to in a contract. So, bottom line is, regardless of any special stipulation in a contract, regardless of the type of loan, but specifically for the purposes of this video, an FHA, VA, or USDA loan, if a contract between a buyer and a seller fails to close, and buyer and seller do not agree on the disbursement of the earnest money. It will be up to the holder to interpret the contract and make a decision regarding the disbursement of those funds. A reasonable interpretation by a broker is that what I just said, the government is going to supersede any contract language even agreed upon by the parties. And based on the amendatory clause, the amendatory clause does protect, and let me look and let's see what I'm trying to read to you guys. The amendatory clause is going to protect a buyer's earnest money should a buyer terminate a purchase and sale agreement based on a low appraisal for a government-insured loan, regardless of any agreed-upon contract, stipulation, or exhibit between the parties. The holder may interpret the contract where it does say that a special stipulation is going to supersede an exhibit. But then again, the exhibit does control. Bottom line, you need to know who the holder of the earnest money is and what their interpretation of a buyer getting an FHA, VA, or USDA insured loan is with respect to the earnest money. Bottom line for you listing agents representing sellers. If you get a purchase and sale agreement that your seller wants to accept and go binding with the buyer, and the buyer is getting an FHA, VA, or US, then regardless of a special stipulation, there is a good chance that if the appraisal does come in low, the buyer still will have the option to terminate and get their earnest money back. Now, we've done all kinds of videos on all sorts of other programs out there that are to guarantee an FHA or VA or USDA buyer with a cash backup offer. So there are all sorts of other options for these buyers. But I specifically wanted to bring to your attention the issues that we are having with a special stipulation in direct opposition to an amendatory clause for a buyer getting an FHA, VA, insured loan. Comment below. What are your thoughts? What has been your experience on both sides, representing sellers and representing buyers in this market with these appraisal gap contingencies and these government-insured loans? I'm curious as to what your experience has been and your thoughts. Thank you guys so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.